Hello and welcome to another update video on MSTR. We'll take a look at how the week finished for MSTR for strategy, and what we have on this chart is a possible 1-2-1-2 setup to the downside that's unfolding, which is a bit concerning, I have to say. From in the orange scenario, we have a wave 1, wave 2, wave 3, wave 4, wave 5 in a wave 1 in orange. Then this here could be a wave 2. It's a 3-wave move up, so that's a concern. And the move down does indeed look like 5 waves again. Wave 1 of 3. This here could be a wave 2 bounce again. And as long as we're holding below $342.64, the pressure, I have to say, appears downward. So further downside from here appears possible and likely. I have to say, however, that of course, I explained yesterday already about the larger context. I have to say that, of course, it's not all lost. I'm not saying this has to happen. I would still very much prefer another run to the upside, but it's getting difficult for the bulls. They had several opportunities to run and drive the price higher, but support levels haven't broken. It's just that structurally, I have to say this does look like a 5-wave decline, so it is a bit concerning, but we are holding above this 78.6 retracement at $272. So support is still holding, and we can see this as a 1-2-1-2 setup to the downside, which could obviously continue to the downside and break support levels essentially, but only as long as we're holding below resistance. So the next bounce will be really important. So you see that here, wave 1, wave 2, wave 3, 4, 5. Now, I have to say, obviously, there are still bullish opportunities, but as explained in many updates before, the move to the upside from the February low, I think it was, ended as a 3-wave move up. So we didn't get 5 waves, which means that if we talk about upside, it can really only be a diagonal pattern. And these are messy structures. So, that means we have to work more with levels and zones than microstructures, because the microstructures don't give us clear probabilities. With only 3 waves up, we just don't have that upside reversal or upside breakout pattern. If we zoom in a little bit, then we see what now matters. So I said to you, we'll see we'll check how the week closed and what is going to become important next week. So this is our resistance area, and I'm going to watch this very closely next week. It's between $302.87 and $342.64. And this wave 2 bounce could send us higher in an ABC structure. So the focus will be on higher prices, in the very short term, because we could form this ABC structure. Again, it will depend on the next smaller pullback. If we hold a higher low, it's likely a B wave, which is a corrective pullback. And even if we go up in a wave 2, this can be a 3-wave move, but can still send us higher. I would pay attention to this particular trend line, which is likely going to keep the price down. So we're now testing that. It's coming in around, $293. So pay close attention to that one. And if we break above it, the focus is going to be on higher prices particularly. So maybe one scenario I can imagine might be playing out is small breakout, retest, up. Okay? So something to track. But what if, we start to see continuation of upside momentum, we form a higher low and a higher high? Well, guess what? That's our 5-wave move up. That's what we really need to see for further confirmation that the bulls are taking the lead. And then we can call this move up wave 1 of a C wave up. We can track the wave 2 pullback, and then we can continue higher from there. 5 waves up, 3 waves down and up. So this is what we should track going forward. Tracking higher prices is essentially. However, as I said, there's the risk that the market might see rejection from the resistance area. There's just this risk. So therefore, I think what we really need to pay attention to is the area here, starting at $302.87, and then we've got $313.99, $325.50, $342.64. And the 1-2 setup to the downside will not be invalidated until we actually break above the swing high from the 6th of October. That's the invalidation point. I mean, that's a proper invalidation point. Yeah. But it already becomes less likely, this orange scenario, if the market breaks above the 78.6 retracement, which is why we're using these levels. Yeah, they give us an indication of when the trend is starting to shift. But really, or when, let's say, when probabilities are starting to shift. Yeah, not the trend necessarily, but the probabilities are starting to shift. And then we have obviously the very objective levels like invalidation points and everything. So yeah, that's basically giving you all the information I think that you need for next week. One more thing maybe, what we should add to the chart is here a Fibonacci micro support zone. I'm going to add that to the chart, and I'm also going to add with you guys now how the bulls could take the lead. So we could say wave 1, 2, 3, 4, 5 in the white scenario. That's the short-term bullish scenario. Market can grind higher like this in potentially 5 waves. But it's just at the moment a potential. This is obviously what we want to see from a bullish point of view. In the short term, as you can see, as long as we're holding $247.37, there's a case for short-term higher prices, especially because the market overall reacted here to the 78.6 retracement. So I'll keep you updated about all of this. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, then make sure you subscribe to this channel. Thanks so much. Bye-bye.